Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the markets that affect the precious metals markets. Miles, what is happening? I know what's happening right now. It's crazy.
It's been a fun couple days, Rob, depending on how you like to look at it.
Woo.
If you like popcorn and lawn chair,
Yep.
sitting outside in your front yard, listening to the neighbors yell at each other, trying to figure out what's going on, that's kind of been what it's like around here. So, yeah, fun, exciting markets. You know, to be honest, the volatility over the last week has been so rampant, really across the board. I actually want to take a little bit of a step back and change it up just slightly this week. Normally, we look on the week-to-week market charts. I honestly don't know if that's going to paint much of a picture, just because the ups and downs have been so dramatic over the last 7 days. So what I'd actually like to do, since we're kind of in a declining market across the board, I instead want to go back an extra couple weeks and really just look at how things have moved thus far. So this is your kind of weekly recap to kick the show off, and then we'll get into it. So starting off with gold, gold down about 1.5%. So we're going to start nice and easy. We're going to ease everybody into this here. Gold down about 1.5%. Currently, it's sitting at about $3,090. At one point, though, gold was down as much as 6%. So a pretty steep decline in gold here when we're looking from the previous high here a couple weeks ago down to about where we're at now. So, however, those numbers are going to get a little bit bigger as you'd expect. So moving over to silver, silver from its previous high down about 10.75% to $30.80. But at one point here a couple days ago, silver was down over 17%. So a pretty significant decline in silver in about a week. And then a little bit of a bounce that we're sitting at currently here. Platinum down about 9% to $916. It was down about 14.5% at one point. And sister metal, palladium, down about 9.5% to $905. It was down about 13% at one point. So all of the metals, the industrial metals across the board, seem to be declining, while gold is actually holding pretty steady. It's almost like that's what it's supposed to do in an emergency. So if all of the precious industrial metals are down, what if we just gander over to your best friend, Rob, copper?
Oh, no, we don't want to talk about copper.
Oh, we don't want to talk about copper? Just to say, okay, well, if the precious industrial metals are down, what about the industrial metals as a whole? And copper tends to be the litmus test that most people turn to. So copper currently down 16%. It's sitting at $4.40 off of the previous highs. But copper was down 23% at one point, Rob. So we had a pretty significant decline in copper, although it is also bouncing here yesterday and today. That's akin to what we're seeing in the regular equities market. You know, the S&P currently down about 11%. That's off of the February all-time high. It's sitting at 5,336, but the S&P light copper was down 21%, so over 20% at one point. And anytime we see that type of movement, I always like to go back to the old Dow transportation average. It's the old one of the main tenets of Dow theory, the idea that if you're not shipping goods and services, you're probably not selling very much. So the transport average is a good place to say, okay, well, so goes the transports, then goes the rest of the market. Well, the transports didn't top out in February, like say the Dow Industrials or the S&P did. The transports actually topped out back in November and have been on a decline since then. Transports are currently down 22% with a bottom of about 30%. So once again, the transports have been telling us for the last month or two here, hey guys, things are going to turn down.
Yeah.
So that's where we're sitting at this week, with some pretty sharp declines across the board, except for Old Faithful gold that is down marginally, but not enough to really get excited about. So where do we go from here, Rob? Is all of this just backlash on tariff discussion, or do you think there's a bigger picture here?
I think there's a bigger picture. I'm going to quote Doug Nolan, one of our portfolio managers over at Wealth Management, McElvany Wealth Management, He's saying, hey, stocks are just a sideshow. Really, you need to pay attention to the 10-year Treasury market. And I could not agree more. That's why Doug Nolan is as well known as he is. We have to refinance $9.2 trillion worth of treasuries between now and June, just a few months away. I don't know how we're going to do it. That's a whole lot of treasury paper just spewing like a volcano into the financial markets. So we haven't seen any volatility yet.
Well, and the Treasury, that 10-year Treasury yield, which had been rising as the interest rates had been rising here for the last couple of years, that 10-year Treasury yield actually took a nice little dip here for the first couple months this year. It was down almost 19%. It went from 4.8 to about 3.9. So it came down about a point. That was on the expectation that we might see a halt, if not a decline in interest rates. Trump has been begging the Fed Reserve to consider lowering interest rates again because every president wants to lower interest rates. But we're not necessarily seeing that. And now we've seen just here in the last few days that Treasury yield jump about 11.5%. So it's back up at like 4.3 and change. And like you talked about, with significant rollover coming, it's very likely we're going to see those Treasury yields continue to climb.
Yeah.
So liquidity may become an issue here.
I think it is. With the whipsaw that we're seeing in the NASDAQ and the Dow and the S&P over the last week, just huge down days, huge up days like today. I mean, the Dow is up almost 3,000 points just today. This has got to be hurting people in the markets because you think you're in one paradigm and then suddenly everything shifts to the other side of the boat.
Sure.
So, yeah, I think liquidity is going to be a huge issue coming up into the summer months.
So you look at something like the S&P when it does end up getting choppy, and realistically, the S&P's been pretty choppy for about 5 or 6 years now. In fact, you can argue the S&P started getting choppy before we ever heard of COVID-19. Because we had in 2018, 2019, we had a 20% drop in the S&P. But then we had a rebound that continued to climb. Then COVID hit, we had a 35% drop. Then it turned around, continued to climb. Then we had a 27% drop in 2022. Now we've been continuing to climb. Now we're at a 21% drop in the S&P. Like, these are significant percentage numbers and not exactly what you would expect to see out of what should be a relatively stable 500 best companies in America indicator. So, and lo and behold, you go back and you kind of look at some of the market dynamics going on leading into the 2008 stock market crash, and things were a little bit choppy then too. So I'm certainly not calling for some big 50, 60% market crash pending. I've been telling my clients, talking with them, there's a number of things that can come out of volatility, but the reality is we have to live in the world we live in, not the one we think might happen. And I think that's why it makes sense to approach these types of markets with a relatively stable and steady hand and a plan that you had developed years prior that can account for these type of market movements.
But it's not too late to shift things around. I know there's still a lot of money sitting on the sidelines in investors' accounts. Gold is doing what it should have done all along. For years and years and years, I would sit here and gold was not responding to the events or to the inflation as we knew it to be. And I think you can point out the manipulation of gold. That's certainly been talked a lot about. We don't really go there very often. But now, with the big players from around the world, the big central banks and the money center banks and the countries shifting allocations to gold as a way of settling trade between themselves, I really think that gold is finally being able to crawl out from underneath the control of New York and London. It is now a global tier one asset and is finally doing what it should have been doing all along. And we still have so much further to go. Gold isn't going to fall from 3,000 and go back to a number everybody hopes it will. I mean, we will see some pullbacks because that's just the way markets are.
Sure.
But the long term for gold, name a number, it's going quite a bit higher from here. And in dollar terms, just like it has in yen terms and in euro terms and other countries' currency terms, gold has radically shifted upward versus their currencies and not so much in ours, and our day is coming now.
Yeah, Rob, I think you're right. I mean, you talk about the big time buying of metals. You know, a couple weeks ago, or maybe a month or so ago, we were talking about pretty heavily just the skewing in the COT report and discussing how we expected to see that probably tail off as the price of gold, which is now up 55% over the last 12 months, maybe finds a ceiling in here and takes a little bit of a breather. But lo and behold, we get into some pretty severe market volatility like we're seeing now, and gold has no intention of taking a breather. You know, it's granted it's paused, but it's paused for a couple days to a degree that if we didn't have market undulation elsewhere, you wouldn't, looking at the gold price, assume it's doing anything but just like having a smoke break. And then I go over and I check the COT report, and while it's not quite as skewed as it was, it's still pretty significant. You know, we're still looking at over 200,000 long positions on the managed money category compared to 40,000 short.
Yeah.
So the short positions are growing. You know, a couple weeks ago it was 240,000 to 10. Now it's 215,000 to 40. So obviously it's tightening, but it's not like we're seeing a dramatic snapback the other direction. And then, shoot, you mentioned other countries. I mean, we're looking at the gold to Japanese yen up just since 2022. Gold's up 133% in the last couple of years, basically in the last 2 years and a few months, when it really took off in yen terms at the end of 2021, beginning of 2022. So gold is finally being that thing, which, well, like you said, it really always has been. But we've been watching gold sort of flying against these other currencies. And with the interest rate rises in the US dollar, the dollar became more appealing across the world.
True.
Treasury bills and really trying to hold that in place, the value of the US currency. But you throw tariffs into the mix, they're not lowering interest rates, and now we're starting to see what the comeuppance is in the gold price, not just internationally, but here over the last year, we're seeing it in US dollar terms too. So it's doing what it's supposed to do.
It is. Good place to be. And it's not too late. We have a lot further to go with the gold price versus the US dollar.
We do. So there are obviously a number of news things. I don't know if this is the right show to go into it, especially because by the time we finish recording, they'll have changed. And by the time we put the show up on the air tomorrow, they'll have changed 2 more times. But I think everybody's sort of trying to figure out if what's going on, especially here domestically and in the big tariff discussion that everybody's having, like what really is going to be the long-term outcome in this. Either the benefit or the damage done or, you know, whatever side of the political aisle you've already decided to jump in on. So I don't know if we want to throw our speculative hat into the ring there, Rob, but I think the thing that we can continue to try to be is allowing the asset that we love, physical precious metals like gold, to continue to be that sort of port in the storm. Because gold does tend to shine when you see uncertainty, and nothing says uncertainty more than a volatile market, especially a volatile market across the board. I do have one question for you, because this is obviously something that I've been asked a lot about here over the last week, and that's why are we seeing such a disconnect between gold and silver?
That I do not know, because the outlook for the reindustrialization of the United States has never been brighter in decades, but it's going to take time. And yet it's still a top-down market. We're not having a resurgence of orders coming from our clientele. We're staying busy because we're doing a lot of ratio trades, you know, feathering positions. Most of my clients are 80% plus gold, so we've been feathering some of that and going 20% silver, 80% gold instead of 85-15, because I've always been a gold bug. So that's keeping us busy as we are doing that. But really, it's a top-down market from the big players taking possession of their gold, and like the Cott report from the managed money, they're very long and they know something. So I think when the retail buyer across the board in the United States says, hey, I really need to up my position, I think they're going to allocate more to silver because it's still, you're still in the low 30s right now for silver, way off its all-time high. And I do think that's going to help drive the silver price. But right now, spot silver crashed down just below 30. We're just above 30 now. So I don't know what it's going to take because we're over 101 ounces of silver to an ounce of gold. And if you find yourself gold heavy, you might want to join some of my clients and do a small allocation to silver if you can.
Yeah, mine as well. We've been doing the exact same thing here over the last week and still working through that. That's a lot of phone calls to make.
A lot of phone calls,
as
yeah.
you know. But if you hear the show, like Rob said, and you feel like you're heavily allocated on the gold side, this is one of those times where there may be a shorter term opportunity here where we're not loading the boat. I mean, I'm with you. I'm still a gold bug. I think these types of markets prove why long-term gold is the correct answer. For me, I know silver is a great sales pitch, but for me, gold is the steak, silver's the sizzle. But boy, it's sizzling right now at over 100-to-1 ratio.
Oh, it really is. I'll never forget that conversation I had. It's probably been over 35 years ago. A guy called me and said, Rob, I want to buy $50,000 worth of silver because it's going to become worth the same as gold one day. And I just started laughing.
Right.
And he goes, young man, I don't think you know your job very well. And I'm like, well, I started buying silver and gold as a kid back in 73, so I've got a little bit of a background. And he goes, well, why don't you like silver? I'm like, I like silver just fine, but she's like a blonde in a convertible looking for a good time, and gold's the lady down at church that I want to marry. And one of the other brokers looked over from the cubicle next door, and he goes, McLaughlin, where did you hear that? And I'm like, I just made it up. Wayne, leave me alone. But I have always felt that way about gold. We can go on, but that
Sure.
The point being made, right now, there is an opportunity in silver. I think it will pay off, but you have to be patient.
True. And I think it speaks to the reasons people own gold versus the reasons people own silver also.
Yep.
Silver is the thing that tends to be on the retail side more emotional and reactionary. Banks, brokerage firms, and nations don't buy silver. They buy gold.
Mm-hmm.
People buy silver. There's a reason they call it poor man's gold. I don't got Fed Reserve money.
Right.
So it's when the price of gold reaches a certain point, I'm going to have to just buy silver because that's what I can afford. Mm-hmm. And I think that there's something to be said for eventually gold reaches a price where it kind of prices the retail market out of the market. Mm-hmm. And I think that's why you see those big silver spikes sort of near the tail end of the bull market. So
True.
For a lot of people out there who are waiting for that big silver run, don't get discouraged. It's coming. It's just you don't get to decide when it happens. And frankly, you kind of don't want it to happen yet unless you're done buying your silver, because when you start seeing silver outperforming gold, there's a darn good chance that bull market's going to be done in a few months.
Yeah.
And I'm not ready for that personally because I still got more buying to do.
Yep.
But
Amen.
That's just me. So yeah, stick with the plan. You mentioned rebalancing a minute ago. Kind of that's the plan, right? You have your portfolio allocations, you've got your growth piece, you've got your liquidity, you've got your preservation. And it's not about changing what you invest in. It's about rebalancing and taking profits and moving it where it makes sense. And oh, we had gold go up and silver took a big dive and I just happened to be 80 or 90% gold. Let's shift 5 or 10% that direction and take advantage of the decline.
Absolutely.
So don't let the volatility dictate your emotional state. You have a plan, you've got an investment strategy going forward, and I highly encourage people to stick with it. And if you haven't looked at your investment plan in a while, there's no reason not to. If you haven't chatted with us in a while, give us a call. We'll walk back through your plan and just see how balanced you look. Well, as always, we appreciate you joining us here at Golden Rule Radio every week. If you liked what you heard, you can hit the YouTube buttons, but better yet, why not head on over to our website? That's at McIlvaney.com. You can also find us on Twitter at ICA Gold or Facebook at McIlvaney Financial. And like I said a second ago, if you haven't talked about your personal portfolio with your advisor here at McIlvaney Precious Metals, give us a call. Love to take a look at things and make sure you're balanced in a way that makes sense moving into the markets that we're seeing right in front of us. You can do that by calling us at 1-800-525-9556. Appreciate it as always. Hope you have a great week.